Okay.
I have one person.
Half an hour? That's so sweet.
I'll stay.
I'll give you a
I
cookie.
like it. No, I have to go. I have a meeting. No, but I will stay because I love your stuff. I'll do half an hour and
You
then.
can still have a cookie.
Okay, Adam.
Yes. Or take one for the little.
My son called you when he on Jeff.
Hey! Give him a cookie too.
Bye.
We'll see you this week. Please.
Do you have anything else from your coming?
Let's see.
Is this on Zoom too?
Yeah.
Nice. Clicker? Okay.
All good.
Thank you.
The screen sharing
Are
on.
some people staying on?
Huh?
Are there some people on Zoom? Okay. Just so I can tell that Seth, where does he need to stand? Because he likes to move.
Wherever, if you can see it kind of shows everything, okay. How many people are on Zoom? I think
Princess.
I think I saw her in the office, so she might be good.
Okay.
We can leave it because somebody said they might jump on. Yeah.
Thank you. You went there, she said, I talked to her yesterday, she said she was. Jesse's.
Can you leave it?
Oh, that's it. How are you guys?
Good.
Ashley, with
Hi,
the
Ashley.
insurance group, Dustin's teaching the class, but.
Nice to meet you, Ashley.
This is Destin.
Hi. How are you? Good, how are you? Good.
Some people are gonna be on Zoom,
Okay.
by the way, because they have their Ignite class right before this.
Justin, nice to meet you.
Anna.
Anna?
Yes.
Nice to meet you.
Nice to meet you.
And then three others.
Hold on, sir.
How you doing? How are you? Dressing it up. They get you over your benchmark and you gotta dress
You
it
gotta
up.
step it up. That's right. I do.
You said some are gonna be on Zoom or what?
So we're gonna be on Zoom, there's three others that are
Yeah.
taking a break, and some more are supposed to be popping in.
Who's gonna manage the questions through Zoom?
Say again?
That's a great question. You may just let them, did your Zoom people talk through?
Yes.
They did?
They did talk through?
They
Where
would.
did I see them at? Here?
You won't see them, they can see you
They'll
though.
just be like a,
Yeah.
little bit like a voice that
Camera's back
talks
there,
through.
it's like God.
That's cool.
Yeah,
I'm
right?
in. I'm in for that.
Here's your clicker.
Like if you're playing God today, say hello.
Right?
Clicker.
No one was going out, she was leaving in the car.
Okay, that's fancy.
So FYI, this is my recipe for cookies.
Wait a minute. You make cookies?
Yeah, in the back.
They're delicious.
Thank you.
You actually made them?
So this batch, I got everything ready. My wife did it for me last night because I had pickleball. She hates to bake. She actually did 3 batches because the first one,
She doesn't like to bake?
she loves to cook, she hates to bake because
Okay.
when you bake, everything is precise.
Yeah.
And this recipe calls for the cookies to be made at 425. And so you only can keep them in the oven for like 6 minutes.
Okay.
In the last minute, you have to watch it because
They did.
it's a fine line.
Yeah.
Well, I didn't tell her that, and she walked off, and she was waiting for the buzzer to sound, so when the buzzer sounded, she opened it up, and the whole top was just burnt. So she had to make another batch.
Oh, no.
Did she get a?
I'm sure she loves that.
When I pulled into the garage last night after playing pickleball, and she was waiting for me at the door. I'm like, not good, is it? She goes, I hate to bake. So
You gave her a big kiss and told her she was
I
amazing.
did,
How you show?
so yeah. So,
But she always kills it. It's the second time I've had them. They're always so good.
yeah, the first time, like I said, usually I do them, but last night she did them for me because I was gonna stay up late and I didn't get home till 10. And, so yeah, it's
This is delicious.
You play pickleball often? Yeah?
about 3 days a week.
I've never played. I've heard it's a blast.
It's the fastest growing sport in the United States right now.
Now, did you pick it up recently? Or is that something you've been playing for a long time?
I always played golf,
Okay.
you know, and
If you don't know this about, my man here is a phenomenal golfer.
I,
He's my scramble buddy because I suck at it.
about a year and a half ago, we were going down to Cabo to see some friends. And we've been down there twice before, and we always play golf with, you know, me and Tom. The week before, they're like, hey, don't bring your golf clubs. We're gonna teach you how to play pickleball. Watch it on YouTube. I'm like, what? And it's like a wiffle ball and a ping pong paddle, and it's like this. We went down, we got hooked, we came home, bought paddles, we joined leagues. And I've been, yeah,
We have a set at the house, and it sits on the back porch. We haven't played it.
it's a great. Here's a great, the first time I went to McKinney one time, there's Finch Park up in McKinney. People are like, oh, you gotta go up here and play. There's all kinds of caliber of people and stuff. So I went up there one Saturday morning. Get there, the first people I'm playing with, this 74-year-old lady comes walking out with knee braces on and everything. And I'm thinking, oh, I take it easy on her. I don't wanna, you know, don't wanna embarrass her and everything. And so she's getting ready to serve to me, and she serves, and the ball comes over the net, barely. It's in the area, and it skids. And I go and I miss it. She put a topspin on this damn ball that it didn't bounce. She kicked my butt. I was so embarrassed. I'm so mad.
Should have told you everything.
Oh, yeah.
Oh, I
Grace tells you
know, I know.
everything.
So we tell people about golf, beware the man with the one-tan hand.
Yeah, she humbled me very quickly, and I learned my lesson. And I go out and now, every time I play somebody I don't know,
Yeah.
I'm expecting to play
Play harder.
Andre Agassi.
There you go.
Step on the court or something, you know? So,
Funny. You waiting on anybody else?
we can go and get started. People come in if we want and stuff, because I know, I'm not sure how long this will last, but there's a 2 o'clock class today too.
Is there, okay.
Three.
This, if you guys don't ask any questions at all, we're gonna sit here and stare at each other for like 20 minutes, I promise you. So, it's a pretty quick class, but it should be enlightening, and I think we'll have some good questions from it. So,
And just, everybody real quick, this is Dustin Payne, Payne Insurance. Ashley's in the back. They're located in McKinney, so they are, basically local insurance, professionals here. You'll always see either Dustin or Ashley or Jennifer or somebody out and about. They're always at functions, they're always, walking through the offices and everything. They're available 24 hours, 7 days a week, every day of the week. If you have questions with your clients, if there are issues with the house or something you're not sure, you can give them a call, they're available. The other great thing is, he won't tell you, but he gives back 1,000% to the community with veterans. They have a nonprofit organization called Creeks and Timber Legacy that he gives back wholeheartedly to the veterans, which is a great cause. You'll see stuff come through every now and then, but if you have anybody that is a veteran or associated with a veteran, put them in contact with Dustin. They do great things. And so that's actually how we got involved, was through the VAs and stuff, that I wanted to be more involved with veterans because my dad had just passed away and I wanted to do more. And I've got 2 nephews that are both full-time Air Force also. So I felt like that's what I wanted to do. And actually, I met Ashley first, and Ashley put me in contact with Dustin. So Here we go.
Here we go. Thanks, brother.
Yeah,
Appreciate
absolutely.
it. What's going on in the rate markets right now?
It's a great week. Ever since last Wednesday, the Feds met. Rates have been dropping. Some really good news with inflation. Everybody, everybody's happy with the way the inflation is coming down. Jobs market, jobs report came out on Friday. They were expecting about 170,000 new jobs to come out for the month of September. Projections, those projections actually came out at 150,000 came out. So 20,000 under their projection, which is actually good because it's showing that there's not as many jobs being out there or new jobs are being presented. So what that's doing is it's showing that the economy is slowing down, and that's what we want. We want the economy to slow down just a little bit, catch our breath, let inflation get down to a lower level because as inflation drops, so do mortgage rates, and that's what we want. So you go back from 1940, and you can see the graph. When inflation goes up, mortgage rates go up. When inflation comes down, so do mortgage rates. So that's what
A little more affordability.
yeah, absolutely. So we should be seeing some good stuff over the next 6 weeks, 8 weeks, and then hopefully start of the first of the year, we'll keep the trend continuing. Yeah, good.
Well, I think too, as rates, I mean, I don't know, I'm anxious to hear what you guys are seeing. But if rates, as soon as they drop, it's gonna flood the market with buyers. So if you got buyers in the, I was talking to my mom, actually, you think about buying.
Yeah.
I'm like, Mom, buy now. If you don't have $50,000, $60,000, $100,000 for the cash sitting on the sidelines, go buy now, because later on, you're not gonna be able to get a house that's at asking price. You're gonna be over listing again, you're gonna have to put cash in the deal to make things happen. So if everybody's saying, oh, pause, wait to buy, right now's the best time to buy, in my opinion. You can always refinance out.
Sure.
Right? You date the rate, marry the house.
Absolutely.
So,
I was talking to a gentleman yesterday. He was,
I have commitment issues anyway, so
Yeah.
I'm always looking for better.
I was talking to a gentleman yesterday, and last night.
Tell my wife that, Ashley.
Last night we were over at Boomer Jack's at a realtor event, and the gentleman was talking about they want to sell their house, they want to buy something else, but they just keep waiting and waiting because they have such a low interest rate. And he goes, but my other fear is when interest rates do get down, then I'll have a hard time buying a house because of competing. I'm like, we bought our house 2 years ago, we got a great interest rate, but we paid $65,000 over asking price to get in the house.
Right.
So we got this great interest rate, but we had to come to the table with more money, and that's what a lot of people, once you get down in that low percentage rate, interest rate, yeah, you're gonna have low interest rate,
Should more cash in the deal.
but you gotta have more, you gotta come with more to the table, and a lot of people just don't have that. So the other thing is, if you saw today, the new reports came out, highest credit card deficit that we've ever had right now, over $1 trillion in credit card debt. Wow. So, whereas we've got all this money in our equity, nobody wants to, 70% of the people have a 3.5% or less interest rate, but their credit card debt is
18, 25%.
Well, yeah, it's $35,000 to $40,000 a household, and they're sitting on a 25% interest rate. So, what are you going to do, or how are you going to manage it? So that's the other thing you got.
You guys do HELOCs?
We do not.
Okay.
Texas is very tough, very strict on how they do their HELOCs.
Okay.
I have a really good person.
Okay.
That I will refer to.
So you do refer out?
Refer out. I don't
Okay.
make any money on anything,
Yep.
but if it helps the people out, I have no problem doing it.
Okay.
Yeah, that's another great deal.
We're seeing that too. A lot of people aren't wanting to move because they're not wanting to get rid of their 2.5% interest rate or 3% interest rate. So they're choosing to do repairs in the house,
Yeah.
right? And so we've been lucky that we partnered up with a bunch of good GCs too. And so when we're doing our annual reviews with our clients, we're able to go, hey, are you planning on moving? No, I don't want to lose my rate. Okay, great. What do you not like about your house? And we're able to provide those referrals over to those GCs. You guys are getting a little commentary
I know,
here.
right?
A little extra in the
Who
glass.
sells in Plano? Or does everybody, have an issue, or if you have clients that are looking to either buy in Plano or have a house, they're gonna sit on it and get ready to sell it. The city of Plano has a program that I'll send you the link, but it's like beautify Plano, or they will contribute think it's either $4,500 or $5,000 towards home improvement to help for your house. So if you have a kitchen you want to remodel, bathroom, if you have foundation issues or something, it can't be for an outdoor kitchen, it can't be for.
Can you send me that link?
Is that for investment houses as well?
I don't know if it's for investment
If I
houses.
buy a flip in Plano, can I get Plano City to pay for it?
I don't think that's how it works. Because you have to be in the house and you have to get it approved before you can get the money. So you have to have someone come out, a contractor come out, give you the quote, you submit that to the city of Plano, and then they will approve it. And then once you start the process, then you get paid. But it's a great deal because there's so many houses that were built in the 60s and 70s in Plano that need updating. I just talked to a lady, I sent her the link because she has a house over here that's got foundation issues. She's wanting to sell, but she doesn't have all the money for doing the repairs. She knows she can't sell the house without doing the repairs because it won't pass inspection. So I sent her this, I said, I don't know if it will cover it, get happy, at least it'll do some part of it, so.
Is it the Neighborhood Vitality and Beautification Group?
Beautification, there it is, thank you.
Yeah,
I knew it had some kind of beautification. Yes, if you could share that link,
sure.
yeah, it's a really good deal. So, all right, I'm sorry.
Great. No, you're good. You're good. So that's how I kind of want the class to go, right? It needs to be question and answer. Don't wait till the end. Let's talk about it as we go through it. I'll probably forget about it if you don't. Deborah, I heard you're going to sound like God if you ask questions, which is really cool. So feel free to ask questions. So as Jeff mentioned, Paint Insurance Group, we've been around since 2010. We started in 2010 where the market was just rocking and rolling, right? No, not at all. So I remember the days where I would get more refinances as referrals as I did purchases. And I remember reviewing my lead list one month and went, wait a minute, we have more purchases than we do have leads. And that was purchases than we do have refinances. And that was probably 2012. Ish area. So we've been in the market cycles a bunch. We cut our teeth in the real estate game, which to Jeff's point means we're available for you guys, right? We understand that communication's key and we understand that we have to move quick in this market, right? So that's kind of what we want to talk about. We're seeing for the first time ever in my career for sure, and I've talked to some other guys that have been in the business longer than I have. We had a guy at the office that had been in the business almost 30 years or 35 years yesterday. And I asked him, I said, man, what's going on? He goes, never seen a market like this ever. He goes, usually one carrier will say that they don't want a type of business or to insure in one area. He goes, right now, all the carriers are saying that. So I don't know if you guys have gotten your renewals lately or looked at your auto insurance lately, but rates are going up and they're going to continue to go up. So we've had for the first time ever, we put a house into our quoting platform and we're having carriers come back and we can't place it with a carrier. They're not insurable. Right? Which can you put a loan on a house that's not insurable? So what ends up happening is we're 3 days away from closing, 4 days away from closing, and then I'm having to look at you as a real estate agent and go, house is not insurable. So unless your buyer can pay cash for it, which I wouldn't recommend anyway, to pay cash for an uninsurable house, there's really no place to go with it, right? So then the deal blows up and now we're back to looking for a house in the market that we're in right now, right? So I wanted to kind of walk you through what's going on and why it's going on. And then how to be prepared for your buyers, right? And talking to sellers, how can we prepare sellers as well as they're going into a listing? Are you guys both buyers and sellers? Yeah, you guys do both? Okay, perfect. A lot of it, and I don't even know if I have it on the slide, but a lot of the education that you can give sellers is being prepared on the front side, right? So if you're staging a house, all the paperwork that's sitting in a file cabinet somewhere, it goes in the storage unit first, right? Or it goes to the back of a closet where you can't find it. So more and more and more we're seeing we got to have proof of repairs. So if there has been a claim or if there's been, and we're going to go through that in a minute, but anytime a seller calls their insurance company or a homeowner calls the insurance company and asks, hey, should I file a claim? It counts as a claim. It counts as an incident. So when you get a clue report, and we'll talk about what that means in a minute, but like a loss history on a house, it'll show a zero paid claim there. Well, the carriers now need to know why, right? So I may call you and go, hey, I'm quoting Susie, and it shows on the house that you guys have contract, there's a zero paid claim, what's that about? On the seller's disclosure, it may not be a claim was made, because there was no repairs needed, right? Or maybe it was small, maybe it was below the deductible. We're still gonna have to know what it's for, and if there was any repairs because it was below the deductible, we're gonna have proof of that. Well, if you're like me, I don't keep my receipts at all whatsoever, and so that could elongate the process on getting insurance on it, right? So just kind of things to be aware of. I know you guys ask when you're doing your listing intakes and you're going over sales disclosures, have we filed a claim? Or have you called your insurance company to ask about a claim, right? I would change that vernacular a little bit inside of there, because if you have, it helps the seller be more prepared, right? So they're not stressed out on undue things that we could get in on the front side. And that's kind of what we're gonna talk about, is how can we be more prepared with the things that we're doing? Make sense? Any questions thus far? No? Perfect. Here we go. All right, so kind of what we talked about, right? Claims causing the increase in premiums. So has anybody got the renewals lately this year, last 6 months? Rates went up
Yeah,
quite a bit.
yeah.
So on average, and I think we have this on the slide, but on average, we're seeing a 45% increase over last year. Carriers across the board. Caveat that with Pain Point, last year, we took a 30% increase over the year before that. So in the past 2 years, we have had a 75% increase in insurance premiums. I'm sure you've seen it on your closing stuff, right? So I think one of the slides in here talks about the average home premium was like $110 when I started. Now it's about $180 to $200 a month, right? Depending on what that looks like. So we'll talk about why that's the case. Cost of materials and labors, increased cost of automobiles. Reinsurance, we'll talk about what that is and why that matters to us. Most people are like, why do I care about the insurance company being profitable? Because it rolls downhill, right? Why do we care about the mortgage banks being profitable? Because it rolls downhill. Considering, we talked about insurance company. I highly recommend having an agent. Like, you call my office, we're not gonna file a claim first. We're gonna try to get to know, hey, tell me what happened, what's going on, what's the cost of repair? Do you have a quote yet from the GC? Well, your deductible, Mr. Client's $10,000 and the repair's only $8. Let's not even make the insurance company aware of it, right? Or maybe the claim's $12,000 or the quote's $12,000, your deductible's $10,000. It's probably not worth filing the claim. Just pay for it, move on, right? So we try to help walk them through that. We do the same thing on cars. I have a lot of people call, go, my daughter got in a fender bender on the high school parking lot, what do I do? What did you get an estimate? No, go get an estimate first. If it's below, my threshold, right, personally, is $5,000, because I know it's gonna cost about that much in increased premiums. I've got 4 teenagers. My insurance bill does not need to go up anymore, right? So I'm not gonna make an undue claim if I can pay for it myself. If I make a claim on my policy with 4 teenage drivers, my rate's going up $1,000 a month, right? And that's not across the board, that's just about what I know it's gonna go up, right? So how do we work through that, right? So why do claims get denied? Any questions on what a claim is? No? So why do claims get denied? They get denied for a couple of things. One could be self-inflicted, right? So if you burn your house down, we're probably not gonna pay for it, right? If you intentionally cause damage to your home or intentionally cause damage to your car, we're probably not gonna pay for it. That's called insurance fraud, right? Other reason it could be denied is because it was excluded on the policy. So there are tons of policies out there now that don't cover water damage, that don't cover replacement costs on homes or on roofs, right? Which means, is anybody aware of that? Like kind of how that works on how a claim is paid out?
Go ahead and explain
Like with
it.
depreciation? Okay, so the way that a lot of carriers are moving is we're not gonna pay the cost of the repair completely. We're gonna pay the cost of the repair minus the age of the roof, or minus the age of the home. So if it's a 10-year-old roof and it costs $40,000 to replace the roof, we're gonna subtract 10 years of depreciation from that roof and then minus the deductible, and then you get the rest that's left over, right? So a $40,000 roof claim, you may only get $10,000, and the seller or the homeowner's got to come out of pocket the other 10 or the other 30K, right? We're gonna see that more and more as carriers start dropping out of the market and as coverages start to change. So for you guys, I would absolutely be reviewing your policies and telling your clients, right? That's a value add to your client when you're making your database calls and you're having your conversations, hey, have you reviewed your insurance policies? Notice the rates went up. Awesome. Do you know if you have replacement cost on your house? Do you know if you have replacement cost on your roof? If the answer is no, hey, check back with your agent, right? Or refer them out to whoever you guys refer to, right? So claims get denied because it's excluded. Claims get denied because it was under the deductible. And they get denied because they're self-inflicted issues. That makes sense? Okay. So just a couple statistics from the Snowmageddon thing that we had. If anybody remembers that, right? So 510,772 insurance claims were filed, and this is just in Texas. And 11.2 billion was paid out to insured losses in Texas. So when you're looking at your renewals and you're going, why are my rates going up? That's a large part of it, right? That was one caveat coupled on the last 4 or 5 years where carriers in general haven't been profitable because they've been paying out so many hail claims. And people ask me, they're like, well, the weather hasn't changed. We've always had hail in Texas. And I say, right, but there used to be cornfields and now there's houses. So before, a farmer would make a claim on a couple cows that got knocked in the head with hail. Now we're filing claims on $70,000 roofs, right? So it's just a different market that we're in right now. There's more houses than there are fields, right? So claims are avoidable or unnecessary, don't file it. That's is what it is, right? If you don't have to file it, a lot of roofers in Texas will tell you got to replace your roof every time we have a hailstorm. No, you don't. If it's not leaking, don't replace it, right? There's no point in filing an extra, right? Deductibles now have to be paid. They're going up to 2-3% deductibles sometimes. So a lot of roofers in the past would waive the deductible, right? If they're 1%, well, they're not gonna waive it if they're 3%. So there's no point in filing extra claims if you don't need to, right? Or if it's within that deductible threshold, don't file it. No point in it. Whoops. And then filing claims frequently can increase rates for homeowners insurance or make it uninsurable. So that's something we're seeing now is 2 or more losses, a lot of carriers won't pick you up. So that's something to know going into it on the listing side and on the buyer side, right? Let's get clue reports early. Let's make sure we're getting them in contact with agents early, because if there's 3 water losses on a house, it's going to drastically increase the cost. Because we can't take them to a normal big, we call them standard carriers. So the big guys are standard carriers, Allstate, State Farm, Farmers, Travelers, Safeco. Those are like your we'll call them type A insurers, right? The non-surplus are going to take up the more risky people, right? So if there's 3 water losses on a house where the house insurance should be $1,800 a year, let's say, now it's going to be $3,000 a year because we have to take them to a surplus carrier, right? Are you guys seeing any issues with B-rated carriers at all?
I haven't seen anything, I've heard.
Okay, we've had a couple of underwriters, so that's a good reason why to use benchmark only.
Yeah.
But we've had a couple of underwriters with other lenders that they won't take a non-surplus carrier. Or sorry, they won't take a non-standard carrier. They have to be A-rated. So if we don't have an A-rated carrier to pick it up and the underwriters won't take it, then that may blow the deal by itself. That makes sense? So really educating and knowing what's going on the front side and getting in early while you're in your option period is really the best way to help your buyers and sellers out, right?
So this might be a dumb question.
Not yet, it's a dumb question. Yeah, I'm interested in hearing it.
Okay. So claims follow the house, not the person.
Both.
Okay,
They're gonna show up on both,
right.
right?
So, but so like, for example, the filing claims frequently, right? Let's say they file 3 water flooding complaints or whatever, and then they sell the house, and does that now go on to the new buyer as well? And
Yes.
whatever okay, gotcha.
Yeah, because when you talk to somebody way smarter than me, what they're looking at is, hey, this house has a frequency of claims, right? It could be the buyer, it could be the seller, or it could be the house, but we're seeing that this is happening over and over again, right?
Gotcha, okay.
And I see it big time with water, right? If you have a 1960s home and the pipes have burst 3 times, it's probably gonna burst the 4th, right? Or if there's 5 hail claims in the past 3 years, yeah, it's a new roof, but that area is a frequent hail issue, right? Which is why you're seeing so much of this issue with insurance in North Texas. It's just because we have a lot of hail up here.
So what if it's just an idea, if you have like a new built in 2020, and they're selling it now in 2023, and they've had like 3 water issues, you can kind of safely assume it's the people living there?
Yeah.
Okay.
Yeah.
Got it.
Yeah. And that's gonna be, I mean, most of the time, so traditionally, insurance on new homes are cheaper because most of the issues are covered by the warranty, right? So we have actually a flyer. Ash, would you send that to me or maybe put it up here so we can go over it? But we did a new versus used insurance cost and gave it to some of our build reps that we work with. And it's drastically different. The affordability is way different because we assume new house is not gonna have that many issues, right? So insurance carriers look at new houses from a more favorable risk placement, if you will. Make sense? Sure. All right, next. Okay, so just a couple of things here on how many claims were reported. I'm trying to move that. Tell you what, I'm gonna stand over here and look up here. I realize I'm standing in front of you. So claims versus reported, how many were closed with payment? How many closed were without payment? I'm always kind of a stat guy because it lets me know what's going on in the market and why they're making big changes that they're making. And these are different types of claims, right? So residential, the ACV, these for actual cash value. You guys all drive cars, right? So you all have actual, right? If you wreck your 2016 vehicle, we're not buying you 2023. That's the way home insurance has operated for the past, at least since I've been around, right? The past 15, 20, 30 years. Or if you need a new roof, we'll buy you a new roof. That's not where we're headed. We're headed to be more like a car, where we're gonna put you back to where you were, not better than where you were. Does that make sense? Yeah. So, but right now, replacement cost is still a thing. Pay the extra money and get it. That's the way I look at it, right? So percentage open, average days to close. Something that was interesting to me is your average days to close is 60 days. That's a long time. A typical, when I started back in 2010, the average time to close a claim was about 12 days. And we're seeing that too on autos, which we'll talk about in a minute. I had a wreck. We had a couch. I was taking the boys fishing and we hit a couch in the middle of the road going 70 miles an hour. Not that much damage to my truck. Like it bent the rods and the steering arms and stuff like that. My car should have been in the shop for 30 days, maybe. 68 days later, I was picking it up, right? So that's increased cost to the insurance companies for rental car and labor and material and storage and all that stuff, right? Which causes, for me, it's not that big of a deal, but when you do 1 million people or 2 million people or how many claims? So do we have case incurred losses? Well, we don't have how many claims total. Yeah, 510. If you do times 510,000, it's huge, right? It's a big deal. So we just kind of wanted to show you this. And hey, there's a lot of claims going on. Next. So increase in premiums. Why are we increasing premiums right now? So increase in parts and labor, obviously. Costs more to build a house now. Costs more to get parts here now. Roof costs have doubled from 2019 to 2022. So we did had us down to Austin to talk about rate increases and claims and loss ratios, which we'll go over in a minute. And they had a case study, a house in Aubrey. We bought a roof on in 2019 it was, Ash, I think? 2019. So we bought a roof in 2019 and it cost the insurance company $34,000 to replace the roof. We bought it again in 2023, this spring, and it cost $72,000. Same roof, same materials, same everything. Side by side, 3 years later, right? 4 years later, it costs double, right? So we've got to figure out that balance at some point, right? The insurance carriers are going to have to take its money back at some point or they go out of business. If it costs you $2 to produce an egg and you sell it for $1, you're not going to stay in business that long, right? So roof costs have doubled. That's a big one. Increase in automobiles, right? So we talked about that. Average costs from 19 to 21, prices have increased an average of 17.2%. The average car payment rose 11.8%. And the average time your car's in the shop is increased by 15 days, causing increased costs for insurers on rental vehicles, right? So we talked about that. There's a stat in there somewhere that talks about each day, I'm going to paraphrase it, but each day that somebody's car's in the shop, extrapolated over the nation, costs the insurance companies as a total of $1 million for every day that you go over, right? So just some backstory of why we're doing this, right? And it's good to be able to educate your buyers. We get calls to the agency all the time. Why did my rates go up? Why is this happening? And we go through this with them. hey, this is not as much as in detail. We talk about it to them and educate them and change expectations on what's looking at now. You guys should be having the same conversations with your buyers and sellers on, hey, this is affecting affordability, right? We have increased mortgage rates, we have increased taxes, and we have increased insurance costs. So that's why it's affecting us, just make it a little more difficult, right? So example, 2010 replacement cost increase, the market value hasn't increased. Oh, I'm talking about replacement cost versus market value. So how long have was anybody in the industry back in like 08, 09? In the room? No? All relatively new? Okay. So in 08, 09, we were insuring for more than what the houses were worth market value wise. And I get this call a lot from lenders, and I get it a call a lot, not you because you're knowledgeable, but from real estate agents, and go, hey, why are you insuring the house for 180? Well, we'll use realistic numbers in this area. Why are you insuring this house for 500,000 when the market value is 550? What does it cost 550 to rebuild it? Right? It only costs 500 to rebuild it. It's a price per square footage similar to price per square footage for a market value, but those are not the same, right? So you're actually going to have multiple different values inside of the house. You're going to have a loan to value, you're going to have a market, you're going to have an appraisal value, and then you're going to have a replacement cost, right? And I tell clients, I could care less whether or not you pay the loan off. What I want to make sure is that we can rebuild the house, right? And each zip code has a little bit different price per square foot to rebuild. So I brought up, at that point they were inversed. It cost more to rebuild the house than the houses were worth. So I would insure them for over the same example, right? I would insure the house for 550 and the house would, the loan would only be 500. And so that was a different conversation. Now we're having the opposite, and really having to work through that with clients. That's something, work with your lenders on that and make sure your lenders are some lenders want to see total market value, and some lenders, I know you guys are okay with it, but they'll let us insure for less than the market value as long as we provide a replacement cost estimate, which translate that to your buyers, causes the insurance to go down, right? We don't have to insure it for an inflated cost, right? We had a guy buying down at Highland Park, and it was a, I don't know, $3-4 million house that we were putting insurance on it. What didn't cost, the house was probably 3,000 square feet, right? So it only cost us $600,000 to $700,000 to rebuild it. We didn't need to insure it for $4 million, but the lender would not budge. And so we had to inflate the insurance cost to closing, and it tripled his rate. He's like, what do I do to get the cost down? I'm like, I changed lenders, right? This is before you, I deferred it to you. But I was like, maybe change lenders or let them sell it to the secondary market. And as soon as they sell it to the secondary market, we'll go back in and change it. So that's what we did. We waited 6 months, had to come out of pocket, the money to close, and then we lowered it down and ended up getting a refund, right? So making sure that you're aware of that.
Similar to like, you don't want, you get your property taxes, you don't want them going off of telling you, oh, your house is worth,
Yeah.
$600,000. You want them to value it at the lowest amount of point possible, just to get the best property taxes, and you're arguing with them all the time.
Yeah, within reason, right? I don't want to underinsure. I can't remember what our average cost to rebuild is right now. It's for some reason 180 to 210. That's kind of where my mind's falling in based on the customization, right? So 180 to 210 a square is probably about right for now. So we don't want to underinsure, because if you underinsure, there's a rule inside of there. If you underinsure for less than 80%, then you only get 50% of your replacement value, right? So you want to make sure you're within that threshold, right? Make sure you insure them right. So, any questions on that? No, I'm not covering it that well. Either that or it's super boring. I see you over here falling asleep on me.
No.
So reinsurance. So what is reinsurance and why does it matter for us? So reinsurance is insurance for insurance carriers, right? So every insurance carrier goes and buys insurance per storm to help cover their losses, right? And they carry deductibles just like we do. Their deductibles are, let's call it $10 million, right? Well, reinsurance carriers, because companies have been paying out more than they're taking in, which means they're unprofitable, reinsurance carriers now are going, awesome, we're going to bump your deductible up because you're not profitable. You're not showing good financial history. So now instead of a $10 million deductible, it's a $60, $70, $80 million deductible, right? Which makes the risk stay on the insurance carrier for longer, which means they have to increase rates, right? So it sucks for us as consumers that we're paying out more on our premiums, but if the carriers don't do that, then they just go away completely, right? And so it's rolling down to them from the bigger companies, right? Go back to the, everything rolls down from the top, right? So because they're getting pressed on the front, on the top side from being uninsured, from being unprofitable or not profitable, then it's rolling down to us. Does that make sense? So reinsurance, we don't really ever get into reinsurance with clients, but it helps from a holistic or insurance, which means for us, that means we have a big hailstorm. If they don't have enough reinsurance, that means claims get denied because the company goes bankrupt, right? And we don't want that to happen. That's something, I heard that back in the mold days, right? Back in the early 2000s, where people would call, file a claim, the company was shut down. They've been paying premium for years, and they would call to file a claim, the company went out of business. All right, what do you do there? Now you're coming out of pocket, and we're coming out of pocket premium wise. So, spread parts that covers the other again. So profitability, if insurance companies aren't profitable, then insurance drops the ratings. So then the reinsurance companies drop their ratings, right? So we talked about that, right? Nothing goes up, self-intentions looks like. Loss ratios right now in Texas are somewhere between 115 and 125. What that means is we're taking on, for every dollar we take in premium, we pay at $1.15 to $1.25, depending on the line of business, right? Talk about that. So what does this mean? Carriers are putting moratoriums on lines. Moratoriums means we're not writing, right? I think Germania pulled out of North Texas so far. I think State Farm went to a 3% deductible across the board. Farmers is not insuring anything over $650K anymore on replacement cost. Safeco, I heard, is stopping. And then Progressive just rolled out where they only take so much new business premium a month, right? So call that $1 million of premium across all their agents a month. And then once they hit that threshold, they stop, right? So even more reason to, hey, make sure we're jumping on these early, right? Like sum all this up by saying, educate the clients, make sure it's affordable, get them in early. Most of the time the lender deals with the insurance referral. I would recommend you guys start doing that on the front side, just to help educate buyers. 45 to 60% increase rates. That's kind of what we're looking at over the next 12 to 18 months. So whatever your rate is this year, plan on another 45 to 50% going into 2025. So we've talked about that, right? When you're making your loan estimates and you're talking about your payments and your DTIs with your lenders and the people that you refer business to, make sure they're adding that in. Because I would hate for that to buy up. The days of a $60 insurance policy to get a deal closed are gone, right? Those are long gone. So affordability homes with increased taxes and mortgage rates coupled with insurance costs is affecting affordability, obviously. And then average home insurance in 2019 was $120 a month, and now it's $240 a month. That's average across the board for what we see in North Texas. And average auto policies were $100 per car, and now it's $180 per car. And I know you guys, if you're paying insurance, you probably are seeing that, right? Yeah. So what can you do for your buyers, right? So we talked about clue reports. Clue reports are loss history on the house and on the buyer, to your point. Or sorry, and on the seller. So it's gonna follow the seller and the house. So it'll be on the record for 5 years or 3 years? 5. So it'll be there for 5 years. We do see sometimes where it'll pull in longer, but for the most part, 5 years are kind of what we look at. If you're talking to a seller, ask me if they have any claims. You feel free to call us, right? We'll run the clue report even if it's on a seller. That way you're educated when you're talking to them and go, hey, I had my guy go ahead and pull a clue report for us. Looking like we had a claim back in 2019 for a roof. Do you have the paperwork? No? Okay, awesome. We need to get with the roofer and make sure we have that, right? Because we're going to need that going forward. Same thing goes on your buyer, right? You guys are out looking at 15 different houses. You put offers in on 3 of them. Shoot me or Ashley a text. Send us a text and go, hey, these are the 3 houses we're looking at. Can you run clue reports on? Right? It doesn't take any time at all. We can jump in and knock that out, right? For you guys, I mean, that may be the difference of which ones do we want to make offers on, right? If this one has 5 water claims and this one has none, right? It's going to be easier and more affordable for the client to get into that other one, right?
The reports are free, so the last class we did here, we had a couple agents get confused because whoever they were talking to were trying to charge them for a Clue report. It is free to do, so make sure whoever y'all use for insurance, whether it's us or somebody else, like, they don't let them tell you that it costs anything to run it.
Yeah, everybody can do it,
Yeah.
right? Like I've had a guy say, well, my insurance guy can't do that. Like, no, they can't. Everybody does. That's how we come up with the loss histories, right? So we go in just like we were normally gonna do a quote, we'll plug it in, it comes up with a loss history, right? So let us be a resource for you on that. When having your buyers go through the initial pre-approval process, have the lender get a quote for insurance early. I assume everybody in here uses Jeff or will be using Jeff in the near future, right? If you send it to Jeff, we look at it anyway,
Absolutely.
right? So it makes it easy. But if not, reach out to your lender partner and go, are you getting, or everybody talks about not the pre-approval, it's the, if you guys actually pre-underwrite it?
Pre-qualification to pre-approved.
Okay.
Yeah.
So make sure they're, hey, what do you have for insurance on this deal? Oh, I have $80 a month. Why? It's not affordable anymore, right? So that's gonna cause a problem, right? Let's make sure that our lenders are educated as well. And we're doing that with you guys, right? We're trying to help you guys estimate as much as possible. There's nothing more frustrating to getting a week out of closing, and now you can't close because the DTI doesn't match up, right? And ultimately, that affects y'all's paycheck, right? So we want to make sure we get these deals to the table. Understand the current market and trends, which we kind of talked about some of that. Focus on the now and ask your vendor partners for insight. Ask us what we can help with, right? Let us know, hey, this roof looks this way, or I've had real estate agents call me and go, hey, we're making an offer on this house and I'm not so sure about this roof. Can you do a drive-by? Half the time, if you'll send me pictures, I can tell you yes and sure or not, right? But if and Ashley and I are out all the time, so if we're in the area, we'll go by and drive by. One thing that's coming up a lot with carriers now is trees. So if trees are within 5 feet of the roof, a lot of carriers are going, we're done, like we're out. So that's another thing to educate your sellers on, trim your trees back. Which kind of stinks, because I like big trees above the house, right? So I'm kind of torn with telling the client to cut big, nice live oaks, or big, nice oaks. But if carriers are wanting that, that's what we gotta do, right? So.
And siding.
Siding. Making sure siding's not falling off?
Siding, yeah.
Oh, on the side of the
On
house.
the side, like whatever siding's on the house, it has to be right, because we ran into both of those in one deal this week.
Yeah.
So can't show any kind of dry rot or anything like that?
No,
or-
they would have to fix it before for
Yeah.
insurance to.
So it's like a VA loan or FHA loan?
Yeah.
Both of these, pretty much the same requirements
Yeah.
where,
It should be, yeah.
No.
If we ask for repairs, do not send us inspections. We do not want to see your inspections. If there's any issues on the inspection, I have to disclose it.
Yeah.
So I would prefer not to see it, and just send me the proof of repair, we move on,
Yeah.
right? So I had that one time, I was an early agent, or I was a young agent, and I was trying to prove that there was a water damage repair. You know, I sent the entire inspection packet to the underwriter with the water heater on it, and they denied the house completely. Because they're like, what about all these other 15 pages of crap? And I was like, dang it, let's go to another carrier now, right? So, anyway, just kind of FYI on that. Make sure we're insured for replacement cost and not market value, right? Make sure there's not inflated replacement costs inside of there. I want to make sure that those premiums are right for what we're looking for. And then utilize replacement cost estimators. That's something that we talked about just a minute ago. Ask your lenders, are you using replacement cost estimators, or do we have to do the increased value of the house, right? Are you having to insure for loan value, or if your agent can send replacement cost estimators, can we use that? Make sense? Cool. Again, have the early conversations with your buyers on the current value, or on the current market. Once they're working through the pre-approval, lenders can get a rough estimate. Don't rely on your lenders to do so. Again, Jeff does a great job of it, but a lot of lenders don't. A lot of lenders just plug a number in. Would you concur with that?
absolutely.
They just plug a number in and they don't really do their due diligence on the insurance side, right? Well, now we're seeing that that's a bigger deal because carriers aren't insuring the way they used to be. And advisor clients deals are blowing up on the back end. So we have a ton. Matter of fact, I got one with your team where they referred it to us early on. Now we're a week from closing and they don't have insurance. We haven't got a quote. Nothing's happening, and the buyers were putting it off. Well, hopefully we can get that deal done, right? Underwriting now, we used to be able to provide, if you called me for a quote, I could give you a quote in an hour, easy peasy. Now we're seeing sometimes 3 to 4 days to get it back out.
And it also makes a difference. I learned my lesson, early on that if you do wait, or if there is, you do plug in just an estimate, and if the actual quote comes in just a couple dollars more over that estimate that you plugged in, if the client is, or the customers are close to their DTI, screws it all up. And I wasn't paying attention, and I'm like, oh, it's $154 for, for the insurance. When I got the insurance quote, it was 160 something, and they were over the DTI, so they got rejected. And we had, hours to get it fixed before we had to delay closing. So it's, you learn your lesson real fast on that, so.
Yeah. I'm not a doom and gloom guy by any means at all. It's gonna find them in insurance for that, right? But we can fix all this by just being proactive. That's all, right? Be proactive. When you're out looking for houses, you're out running around on a Saturday, you got a couple houses that you're thinking about making offers on, get Ashley's information, fire us over the addresses, and we can run stuff for you, right? Or whoever you use. But use this as a tool, use this as a sounding board too, right? Is that it? That's it?
Yeah.
All right, what questions you guys have? None? Come on, give me some feedback.
You did great.
Was this enlightening? Did you guys learn anything here?
Yes.
Yes. Do you think it's helpful?
I didn't know really anything about home insurance
Yeah.
before this, so yeah.
Is there something that we could give you guys, like, I'll call it a takeaway, but is there something like a one-sheeter that we could give you guys that would be beneficial to your buyers and sellers to explain some of that? Would that be helpful?
That would be helpful, yes.
Okay.
I also like what did she say? It was like, I think the slide before this, it's like the kind, what can you do with your buyers?
Yep.
What can you do for your sellers? I like that.
Okay.
So what can you do for your buyers? And I would also like add maybe like some points of what I should be telling the buyer.
Okay.
Like, I don't know, maybe some facts that, nobody knows until you start getting to know the company better.
Cool.
That would be helpful.
Okay. Just some walking around knowledge?
Mm-hmm.
Okay.
Something that if somebody asks me, because I don't understand insurance.
Sure.
To be honest, personally, I do not trust insurance people because you
I don't
pay all
either.
these premiums and they take the money, and then whenever you come with a claim, they're like, oopsie daisy, you're not getting paid. So you're like, okay.
Why? Yeah.
And you're still like, oh, we're gonna give you this part, but the rest of it is gonna come out of your pocket. And so why did I pay for 5 years?
Insurance, I agree with you. That's frustrating for me because the agents are not held responsible,
Yeah.
right? So I've had clients call me and go, hey, I just got a roof claim and I'm coming out of pocket $25K, why? Right? And they have left us, right? They canceled us and they went to another carrier. And I'll say, well, man, send me your deck page, I'll look at it, and I'll look at it and go, they have actual cash value and your deductible is 2% instead of 1%, right? So that's why you're coming out of pocket. Like, why didn't you tell me that? Like, unfortunately, you signed the paperwork.
Oh, yeah, so that's something that if somebody asks me right now, a buyer would ask me, I would be like, yeah, don't do that.
Yeah.
So I need some information that I can share with people that I don't know and that maybe I don't understand. Just to give like raw facts that will help them to understand where to go, where to ask, what they should be looking for.
Cool. Ash, let's send over the checklist that we send out to clients that are leaving us. So we do this kind of like, are you happy kind of thing, right?
Okay.
So somebody calls us and says, hey, we're leaving, we're going to another carrier, right? Well, right now we can quote through every carrier in North Texas, either with us or with a partner agency, right? And so we'll send them, it's a one-sheeter that has 5 or 6 different coverages that we recommend all the time. Water damage, replacement costs on your roof, sewer and drain backup, yada, yada, yada. And we'll send it to them and go, hey, as you leave us, before we cancel your policy, make sure that you have these 5 items on it, right? So that may be a good one to send out. And then we can send out some statistics and things to talk about and that sort of thing. We can build this out.
And I'll send you the new versus used ones, because
Yes, I like that.
we send it to our builders a lot because it's kind of a leg up for them too. They're like, you know, it's better to go buy, buy our house, but,
Saves $100 a month on average.
yeah, it has a QR code too, that way, like, your clients can scan and they can go ahead and get a quote, and it kind of helps them be a little bit more proactive. You can be like, here, like, this is plain as day. You can clearly see the difference in price, so,
And that's
I'll
what
get
you
y'all's info.
can copy me on that as well. Also, if you could put on there, Justin made a good point earlier about when you're doing an annual review, I don't know if y'all started this yet, but when you start doing annual reviews and talking to the clients, bringing up, have you looked at your insurance, looked at your current insurance? Are you covered for your roof and stuff? If you start asking them, have you looked at your coverage, and are you aware of this? And, they may not know. And then when all of a sudden they start looking at it, or they send you a copy of it, you're like, you realize you fall under this, or you're not covered, for this part. All of a sudden you just became their best friend. 'Cause
Yeah, you became the advisor.
Yeah,
Right.
and that's what you want. So, not only, and it can help with, not even your current clients, but just, your database. When you're calling out people and you start talking to people in your database, and you start bringing this stuff up to them.
We've had a lot of success with teams calling through and you guys are getting ready to start making your holiday calls, right? So we're always looking for another reason to reach out to our clients, right? We're doing the same thing. If I call you every day and I say, hey man, what's going on? You got any buyers right now? It's really boring really fast, right? If you call your clients every single time, I go, hey, you think about buying or selling, or do you know a referral? We're gonna stop answering your calls. So we're always looking for reasons to call and talk, just to be top of mind. So one way I would do that, and I've had a couple of agent teams do this and be successful, right? Is, hey, we're coming on the winter. They're calling for a really hard, cold winter this year. Do you know if your policy has water damage coverage on it? They're gonna go, I have no idea. Why, are you in insurance now? They're gonna go, no. But I just took a class. We just had this conversation. I wanted to call and make sure that you had that, right? Insurance rates are going up across the board. Let's make sure we have the right coverage.
It has to do with the home, and you're their professional. You're the person that,
Yeah.
You want them calling you, or, you want to be reaching out to your clients, every month through some way, some form, whether it's, email, letter, or something. And, this is just another option, another way for you to give them. So I know we got another class already started.
Cool.
Any other
Do
questions?
we have all of your contact info? Did you get all that?
I'll get y'all's.
Okay.
Yeah.
If we'll get that, feel free to reach out to me, reach out to Ashley.
So much.
We'd love to be a resource for you as much as we can.
Thank you.
So, you bet. What school's that?
Rice.
Rice, okay, got it.
Didn't go there, but.
Didn't go there, but got the t-shirt, huh?
Yeah.
I like it. Well, good. Well, Jeff, thanks for having us,
I
brother.
got a Harvard one too.
I appreciate it.
Me too, actually, I have a bunch of
I went ahead and bought an Arkansas shirt because my money's getting ready to start going there.
There you go, that's proactive.
That's true.
That's it.
Do each of y'all have cards yet? I know you
Yes, I
are.
do.
Okay. And then I can just text you. I use the digital card.
Oh, yeah, I have that too as well.
You'll do perfect. Well, I say digital, mine's the.
Well,
maybe it's gonna make us-
All day long. Yes, ma'am. Bet.
That's right.
Thank you, Ashley. It was nice meeting you.
Absolutely, you too.
Some days there's maybe one meeting.
What's your,
They go to
You're welcome.
meetings and stuff in the mornings, but,
Thank you.
You bet, thank
thank you
you.
for staying.
Yeah, I missed all that.
3, 3, 4, 5.
All right, here's
My
this.
personal stuff I was planning to go
Okay.
there, I said, this is more important.
Stay.
I love your
Yes.
stuff.
Thank you, I appreciate it. Are you,
Nice to meet you, thank
on
you.
Friday?
I will be here on Friday.
Okay, I'll see you,
All right.
because I'm working on another little function on Friday as well,
All right,
okay?
perfect,
All right,
thank you.
thank
Have a
you.
great day.
Bye.
Did you? Cool. Cool. Made notes on how I can improve?
Just the class in general.
Okay.
Actually, you want to take your tea, or you want?
Cooker.
Even though we all can use it if you want to.
Okay.
Do you have a card on you?
yet? Sorry?
Do you have a card on you?
No.
Okay.